$2,800 a month in dividends without selling a single share of your investments. That is $33,600 per year in pure hands-off passive income. Most people think you need multiple millions of dollars in the bank to generate that kind of cash flow, but the real number is actually much lower than you've been told, and the fastest path to reach it is not what most dividend investors are doing. If you are tired of the traditional wait 40 years and hope strategy, pay close attention, because we are breaking down the math, the assets, and the exact roadmap to hit that $2,800 monthly milestone in record time. Why $2,800? This isn't just a random number. For the average person, $2,800 a month represents a massive shift in lifestyle. It's the median rent in most major cities, a high-end grocery budget, utilities, and car payments all rolled into one. It is the freedom number. When your portfolio generates $2,800 every single month, you aren't just investing, you are replacing a significant portion of a full-time salary. You are effectively buying your time back. But to get there, we have to move past the surface level advice and look at the hard numbers. Before we dive into the specific stocks and funds, we need to answer one important question. How much do you actually need to invest to make this a reality? To understand the fastest way to reach our goal, we have to master the core dividend math. The formula is simple. Your total dividend income equals your portfolio size multiplied by your dividend yield. However, the variables in this equation change everything. If you focus on a standard 3% yield, which is common for very safe, slow-growing companies, you would need a massive portfolio of $1.12 million to see $2,800 a month. If you push that yield up to 5% by selecting slightly more aggressive income builders, that required number drops significantly to about $670,000. But if you move into the high yield territory of 7% or more, the mountain you have to climb shrinks down to just $480,000. Which one do you think most people choose? Most beginners jump straight for the highest yield possible, but the fastest option always comes with a catch. The higher the yield, the higher the risk of the dividend being cut or the stock price collapsing. To win this game, we have to balance speed with sustainability. There are three distinct paths to hitting that $2,800 monthly mark, and each one fits a different type of investor. Path number one is the slow and safe route. This is the territory of low-yield index funds and legendary dividend growth stocks. We are talking about companies that have paid dividends for 50 years straight. The pros are obvious: extreme stability and incredible long-term price appreciation. You aren't just getting a dividend, you're watching your principal grow. The cons? It takes a very long time. With a 2% or 3% yield, you are looking at a 20 to 30-year grind for most people. If you're 18 and have decades to spare, this is a great foundation. But if you want that $2,800 sooner rather than later, we have to look elsewhere. Path number two is the balanced strategy. This is where most successful mid-career investors land. You're looking at mid-yield dividend ETFs and covered call funds that offer a mix of growth and immediate income. These assets typically yield between 4% and 6%. You get faster income than the safe route, and you still get some protection against inflation because the companies within these funds are still growing. This is the middle ground that avoids the $1 million requirement, but still keeps your money relatively safe. However, even this path can feel like a crawl if you're starting from zero. This brings us to path number three, the high yield income strategy. This is the express lane. Here we are looking at high yield dividend ETFs, business development companies, and specialized income focused funds that can offer yields between 7% and 10%, or sometimes even higher. This path provides the fastest dividend growth because the sheer volume of cash being kicked back to you is much higher. The catch? Volatility. These investments don't always go up in value like a standard index fund. Sometimes they stay flat or even dip, meaning you are purely relying on the dividend check. But for someone focused on reaching $2,800 in monthly cash flow as fast as possible, this is the most mathematically efficient route. But here is the real secret. The yield is only half the battle. The real acceleration happens behind the scenes. The secret to reaching this goal years ahead of schedule is what I call the acceleration strategy. Most investors make the mistake of looking at dividends as spending money from day one. If you want to go fast, you have to do the opposite. You must use a dividend reinvestment plan, or DRIP. When you reinvest your dividends, you are using the market's own money to buy more shares, which in turn pay more dividends, which then buy even more shares. It creates a snowball effect that eventually becomes unstoppable. Let's look at a real real-world scenario, imagine you start with $50,000 and you commit to investing $1,500 every month into a portfolio with an 8% yield. In the beginning, the growth feels slow. In year 5, you're seeing progress, but you aren't retiring yet. By year 10, the compounding starts to move the needle significantly. By year 15, that snowball has turned into an avalanche. Because you are reinvesting every penny and adding your own contributions, you hit that $2,800 a month mark much faster than if you were just chasing stock price growth. The key is to hit those milestone checkpoints. Your first $100 a month is the hardest. Your first $1,000 a month is the most exciting, but once you cross that $2,000 mark, the jump to $2,800 happens almost automatically. However, many people never reach this stage because they fall into the same traps. The biggest mistake that slows everyone down is yield chasing blindly. People see a stock offering a 20% dividend and they dump their entire life savings into it, only to realize the company is failing and the dividend is about to be canceled. Another massive mistake is inconsistency. Skipping just a few months of contributions can delay your dividend income goal by 5 to 10 years because you lose out on the compounding of those specific shares. And finally, starting too late. Every year you wait to start your dividend investing journey is a year where your money isn't working for you. So what is a realistic timeline for you? Let's ground this in reality by looking at different investor profiles. If you can only invest $500 a month, reaching $2,800 in dividends is going to be a long-term play, likely taking 25 years or more depending on your yield. If you can bump that up to $1,500 a month and focus on high-quality, high-yield assets, you could realistically hit the goal in 12 to 15 years. Now, for those who are aggressive and can invest $3,000 a month, the timeline shrinks drastically. You could be looking at a freedom date in under a decade. When you see the timeline change so dramatically based on your contribution rate, it changes how you view your daily spending. Every $100 you save and invest today is a brick in the wall of your future financial freedom. Simple, 3-step technique to hit $2,800 a month fastest. First, aggressively invest early to create principal. Step 2, focus on robust income assets with a 6% to 8% yield to minimize capital requirements. Step 3, invest every penny till you reach your goal. Avoid touching the money. Do not vacation there. Avoid using it on a new car. When dividends reach $2,800, the game changes. When your investments cover your bills, you stop working for money and your money starts working for you. This level of passive income doesn't require luck or Wall Street genius. Discipline, numeracy, and choosing the correct course for your timeline are key. Time at the market is more crucial than taking the safe or high-yield express lane. Your financial perspective changes when you focus on monthly dividend checks instead of daily stock market volatility. Stop asking, how much is my portfolio worth? And start asking, how much income did my portfolio generate today? Wealthy investors stand out because of that mindset shift. $2,800 a month is possible with a plan and the courage to stick to it in an unpredictable market. Start now if you want to quit exchanging your time for money and develop a dividend machine that rewards you forever. The true question is, if $2,800 is the goal for absolute freedom, how much money do you need now to start earning $1,000 a month in dividends? The solution may be closer than you think, and as you reach 1,000, the path to nearly 3,000 becomes obvious. Follow the strategy, monitor cash flow, and watch your financial future change with each dividend payment.